There's a lot of talk, well, globalization is ending. I don't buy that. I just think it's being rewired. It's being rewired around security. It's being rewired around resilience, and obviously regional blocks. Asia is a perfect example of that. We are very big believers in Europe. A lot of our competitors and they're rushing off to Asia. We're big in Asia too. But don't give up on Europe. Europe has a lot to offer. And just this year alone, we put over $25 billion to work in Europe. There's been a structural shift. The rules-based global economy is giving way to very much of a transactional, great power competition in my view. And so what does that mean? That creates opportunity. We come back to what is the U.S. trying to accomplish. I think they're trying to, from their point of view, this administration, I'm not in the administration, to come up with a more level playing field from their perspective. Private activity is going to play a very big role, and in large part, if you think about the need for capital for energy, the need for capital for data infrastructure, for data centers, national security is now playing a very important role. So that creates huge opportunities. The governments cannot pay for all of this themselves. Germany, we're in Berlin. Chancellor Merz just came out in the end of July with Made for Germany. Terrific idea, great program, but it's going to take capital, and it's going to take a lot more capital than what your 65 or so large companies can supply. It's going to take outside capital to tie in with the government here. And so what areas today? Okay, security of everything, number one. Defense and dual technology, they tie together.
Yep.
And so I would say that's number two. Critical resources is three. And you have to think about resilience. What areas will be able to withstand those shocks? But think about this. If inflation is in fact sort of 3% right now, and you have a 10-year treasury at a little over 4%, you only have really a 1% real rate. Now, is that too low or too high? You all be the judge of that. But we see that inflation will be, I think we're going to have stickier inflation around the world. I don't know what happens in the long term with tariffs, but they have to at some point have, and somebody's got to pay for it. You know, either the company that's absorbing those or the customer. It's got to go somewhere. And what we're seeing right now in the U.S. is very much a K economy. Mm-hmm. Think about it. You have the K. You got the upper short leg is maybe 30% of the economy. Those people that have capital. If you had any assets during COVID, you did really well because inflation started kicking in, appreciation in real assets, appreciation in stock market, bond market, et cetera. But if you were going hand to mouth and you were strictly on a fixed salary and you didn't really have any chance to take advantage and didn't have any savings, you were hurt. And so what's happened today is that we have broadened the spread, in my view, between the haves and have-nots. That's not good. That's not good at all. We have to figure out what are we going to do to make sure that all people are able to benefit from that. We have a big private credit business at KKR. So do many other firms have private credit. Even banks have a sleeve of private credit. Everybody's talking about, oh my God, private credit's going to go bad. I do worry about one thing. I worry about those firms that don't have a driver's license, that have decided they want to get into private credit, have no way to drive, haven't passed a test or anything. And yeah, will they have problems? They could. I don't find it systemic. We don't take deposits. You know, this is just really what it is. It's private credit. 2 big bankruptcies last 10 days. Not one penny of private credit was in them. But the market hit all of us that are in private credit because they assumed that was it. And then finally, once they figured out, well, this is really all banks, it was UBS and Jefferies were the 2 big banks that were the big lenders in that. I am not worried about a systemic risk issue in private credit.